Okay, this is the last part for our statement of cash flows. This is our financing activity section, the last category listed on the statement of cash flows. Financing activities concludes cash inflows and outflows involved in long-term liabilities and equity. It also includes issuance of stock, paying dividends, and buying and selling treasury stock. So what we're going to analyze first is our cash dividends. So let's just go back up and review a little bit of here above just to make sure as we're looking here. We can see that our paragraph, just to make sure, read again to see if there was anything important needed to do there with like treasury stock, and we can see no treasury stock transactions, so we don't have to worry about that. But when we go and look at our net income, we want to analyze with our retained earnings and just see if there was some dividends issued. So we're going to go ahead and analyze this difference from 2023 to 2024. We can see that our retained earnings went up, but let's just double check that there is no dividends paid out. So let's go ahead and make a T account for our retained earnings. And this is part of step 5. Okay, and so we can see that it started off with a credit balance of 10,100. All right, and its ending balance is 41,900. Let's just do that. I don't think we need that much room. All right, and let's go ahead and look at again. We would have increased by our net income, which was 96,400. Okay, so let's put that in. All right, from just looking at that, we can see that dividends was issued. We got to get down to 41,000. So our X would be dividends, right? Dividends will decrease, or dividends that were paid out will decrease retained earnings. So let's just turn this into a little algebra problem for us. We can see 10,100 plus 96,400. That is 106,500. So these two added together is 106,500. Let me make sure you can see all that. Okay, perfect. And then minus, let's move this over so I have more room. Okay, perfect. Minus the 41,000. Just write that. Oops, 500. Lots of mistakes here. Yeah, that way you know that that's what that was. Okay, minus the 41,900 would equal my dividends that were paid out. So that was my X. And so we can do that and see that it is 64,000. Let's double check my math. There you go. So this was my dividends that were actually paid out, my cash dividends paid out. So that would be a decrease. Let's just write cash dividends so we don't forget. All right, let's go ahead and record that as our step 5. All right, next we'll have is let's go ahead and look at our long-term liabilities, see if we have any to analyze there. So step 6, if we were writing these steps out. Um, Long-term liabilities analysis. Let's go see. And we have notes payable. And we can see that it was 108,000 and actually went down to 79,000. Let's make sure we don't have anything else that we need to analyze there. I think if we recall that there was also a new note that they're telling us about. So let's go back up here and look. Oh, they also did 100% finance on land for 21,100 that we need to include as well. So let's not forget about that. Let's do an analysis. Erase our calculator. So our 108,000 minus the 79,000. So we must have paid out 29,000 more to pay off that long-term liability, but we need to remember that there also was 100% finance of land for that 21,100 that we just saw. So let's add that as well into that difference. So I erased it by accident. Let's redo. Now we can see that actually 50,100 is what we need to count for. And so we're going to go ahead and record that. And so we have an additional cash payment of notes payable for 50,000. Because we had actually increased that note payable by an amount of 21,100. Let's make sure I'm saying the right amount. Yeah, 21,100 by an additional amount. And that was no cash. That was 100% finance. And we want to figure out what was actually involved with cash for that note. So really, technically, the extra 21,100 must have been paid off for that note payable. So we want to make sure we record that as well as a cash payment. All right. And then let's keep going. One more step. Step 7. And this would be just issuance of common stock. So we have to do a little bit more analysis of this one as well. So let's just go and look at our stock. And we can see that it went up. So we know we issued more stock, and so we would have gotten some cash. So let's see, 88,900 minus 64,500, and so we would have gotten 24,400 additional cash for the issuing of stock. So we'll make this as financing as well. Perfect. And let's go ahead, and that was a cash receipt. All right, and it looks like they gave us another blank box. Nothing, we don't need it for anything. We'll add up our 3, and we have, let's double check me. $90,300 decrease. All right. I put that in the wrong box. Hold on here. There we go. Okay, so the net increase or decrease in cash from all operating, investing, and financing. So let's go ahead and get those. And we're looking at 11,200. All right, so now we can go back and look at our cash balance at December 31st, 2023. So we go back to our balance sheet and we can see that it was 15,700. Let's go ahead and put that in. And hopefully when we add these two up, 11,200 plus 15,700, that's 26,900. Let's hope that equals, and we'll know we accounted for all the cash differences. And it is 26,900. Woohoo. So we are in balance. We did it right. So we're done with that statement of cash flow analysis for operating, investing, and financing activities. But, there was a non-cash activity. And let's go ahead and just record that. That was that note payable that we just worked on, actually. That was the acquisition, if I can spell. Oh, my goodness. Of land by issuing long-term, we'll just write LT, note payable. And that was 21,100, and there was no others, just that one. So we can just say NA, leave blank, another blank box. And so our total for that, 21,100. Cool. And we are all done with the statement of cash flows. Let's scooch that up so you can see everything. And that is it.